I'm Tiffany Gruenberg with Family First Life, and this is the final expense close. When you're running final expense appointments, there's a couple of things you really want to bring out with a client. First thing we'll talk about is income. The reason that we want to bring out people's income is because it's important for you to explain in a couple situation or even in a parent and child situation where they're sharing expenses in the household, what type of impact it's going to have when one of them passes. So on the income side of it, it's, like I said, very important to break down each person's income, what they bring in. You want to also explain to them what happens if they're receiving Social Security benefits. You get to keep the higher of the two. Does that make sense? A lot of people don't really understand what that looks like. So when you write it out on your paper, you can X out the lower of the two and really explain what type of financial loss is going to happen. Again, you want to talk to people about their incomes in relationship to a pension. Is there a survivorship benefit on your pension? Will there be 50% of that? Write out what 50% of that looks like and put it on the loss side so that people can really truly see what happens. Now, I like to say things like this. Once you've broken down the income and then you can physically see that loss and you've X'd it out, because at that point they're not going to be receiving that. And you can say things like, John, you're a big guy, I get it, but I can assume that you don't eat $1,200 worth of food every month. Would you agree? So things like that, bringing some humor into it so that they understand it's a big deal. And people will say, well, our expenses will go down. Of course they will go down, but they're not going to go down by $1,200. So that's why it's incredibly important to talk about income and income loss when you're going through final expense appointments. A lot of times people fill out the forms because they are just looking possibly for your just traditional burial coverage. But when you do a good financial inventory, you can prove that income loss. It increases the coverage that you can help families with and really kind of create a larger premium for yourself as well. When it comes to just the burial coverages for final expense, you really want to just break down what that looks like as far as your burial coverage go. We listed just some average costs of your average funeral services. So you have an average service cost, which is about $1,500. Then your casket at $2,300, embalming $500, facility cost $500, grave site $1,000, having the grave dug is also about $600. The grave liner itself is $1,000, and your headstone at $1,500. Now, of course, these are all arbitrary numbers because people can choose different options. But in reality, it is expensive to be buried. And what you do by breaking this down and showing them real numbers is explaining to them that their thought where they only needed $1,000 or $2,000 to bury themselves is really unrealistic. And your averages are going to be upwards of $10,000 to $20,000 when you're using a full burial plan. Now, a lot of your clients are going to bring out the cremation, almost objection, honestly. Well, I'm just going to be cremated. And that's great. Cremation runs about $2,000. It doesn't mean that your family is not still going to want a service, which is another $1,500. It doesn't mean that we're not going to still have to pay for transferring your body from one place to the other, which is another $500. It also doesn't mean that you aren't going to have to pay a facility fee or a stipend to the church where your family is holding your service, which is another $500. So in explaining to them that even though cremation, and you can make a joke, a lot of people are choosing cremation, we're just running out of dirt, things like that, but you still have to build the value in having your insurance in place to protect whatever fees will come up, even though they want the less expensive option of cremation. In a final expense appointment, the relationship is going to be the most important build that you have with that client. You want to explain to people that you recognize that what they're doing is incredibly selfless. We don't put final expense plans in place to benefit ourselves. We won't get anything out of them, and you'll hear clients say that. Well, I care, I'll be dead. But what they're doing is they are really protecting their family. So finding out your client's children's names, finding out their grandchildren's names, finding out who's the most important in their family, whether it's a child that lives very far away who may have to travel to come visit them. That's expensive. Point that out. Talk to them about why the relationship with their family is so important to them, because we don't want to burden our family. Would you agree, Marge? Absolutely. So it's very important that you develop those things. And the same thing with spouses. Now, when we talk about spouses in that relationship, you can say things to people like, I know you love Mary John, right? Building that and pointing that out. This is a selfless gift that your clients will put into place for their families. And bringing that up will just secure the amount of benefit that you leave behind for these families, and also their ability to see that much more clearly outside of just the simple burial plan. Legacy. Legacy is incredibly important to people. We see things a lot right now about creating funeral plans through GoFundMe. That's something that we see a lot. And in our industry, being able to say, is this the legacy that you want to leave? When people think about you when you have passed, do you want them to feel like they have to reach into their pocket when they're already struggling to pay for your funeral? I know that's not what you want, Mary. Let's go ahead and see what we can do. It's things like that about your legacy. And talking about people's grandchildren. You can ask your clients, if they have grandchildren, have you thought about what you might want to leave behind to them? Just a small financial gift, and you can build that in. Let's say they want to leave $200 to each grandchild. That's very easily built in to a final expense plan. Also, when it comes to your final expense plans, you have to talk about inflation. The cost of what it's going to be today is not what it's going to be when they pass away. This is a permanent benefit. It's something that they will keep for the rest of their lives. When they die, it will pay out. What they need today, or what maybe their mom paid today, is not what they are going to pay 10 years, 15 years, or 20 years down the road. So building in inflation to these and saying the recommended amount is $10,000. But let's be realistic, Marge. You're healthy today. Wouldn't you agree? Yes, they may have a couple of health problems, but at the same time, they believe they're healthy because everybody does. So when you create a plan to say, we understand you're going to be here for a while. So what we need to do is make sure that your family is not doing anything when you pass and they're grieving for you. They're not reaching into their pockets trying to plan your services. Because the best thing that you can do for them today is take care of this now. And that's your final expense close.